Hello, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. And using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to exit highly appreciated real estate, eliminate the need for the 1031 exchange, eliminate estate tax, defer capital gains tax on just about any highly appreciated asset, so you can create and preserve more wealth. Hey, I'm Brett Swarts, and I'm here to help you out and understand the Deferred Sales Trust. Make it simple to see if it could be a good fit for you. So we're covering the biggest objections to a Deferred Sales Trust in this video, in this podcast. And in particular, we're going to be covering the installment sale versus the deferred sales trust. And you can get started today using deferred sales trust by going to capitalgainstaxsolutions.com. And so we get questions a lot about, why would I use the deferred sales trust if I can choose like a traditional installment sale? What are the main differences? And so we're going to cover the deferred sales trust and why you would use the deferred sales trust in this video versus a traditional installment sale, and some of the key benefits that it gives to you as a seller. Okay, and as a quick background, the deferred sales trust it has a perfect track record with legal so far, and that's IRS audits, and it's zero changes and zero findings on any of the audits, and thousands of transactions, billions under management, over a 26-year track record. And there's also lifetime audit defense for every single deal. Okay. So let's cover some of the basics of why an installment sale is not great for owners of assets. And it goes to our point number one here, which is buying back in and out of real estate at really any time. Okay. So understanding that timing is so crucial for your success as an owner. Okay. Meaning you can sell high and buy low. And the ability with the deferred sales trust is the funds can go in and out of real estate at any time. Whereas an installment sale, you're tied to the buyer, or you're tied to the asset that you sold. Now you have to ask yourself, well, why am I selling that? Do I want to have to take it back? And is that buyer investment grade? Is that buyer, very strong? And are you going to want to go back into deals when it makes sense for you? Whereas in a traditional installment sale, all of the funds are not liquid, they're not diversified, and the collateral is tied to that single asset, either that business or that real estate property that you're selling. And therefore, you don't have access to the capital to redeploy to opportunities that make sense for you. And so, whereas the deferred sales trust, although you're doing an installment sale, but it's with the trust, the funds can be liquid and available for you to go back into other deals whenever you want to. And so that, to me, is hands down the biggest reason why you'd use this versus a traditional installment sale. But number two has to do with the net rental income. And so with the deferred sales trust, if you are buying a property and you're doing it on an installment sale, you have payments that are coming back to you directly. And when that comes back to you, you're going to be charged ordinary income tax on those, on the interest payments. If it's principal, it's going to be capital gains tax. Same thing with the deferred sales trust. The difference is we can structure the trust to delay the payments for a period of time. Now, I guess technically you could also do that with an installment sale. You could say, hey, no payments for a couple of years, and then start making payments to me. However, a lot of our owners who meet with us are not wanting to give that much freedom to that particular borrower, because they don't know whether or not that borrower is going to pay them back, pay them on time. In other words, they don't want to put all their eggs in one basket. But that net rental income advantage for the trust is you can delay the income from the trust that it's earning, and you can build up, and that can lower your overall net income tax. The next one will be number three, the partnership interest. So a lot of folks want to be able to separate their partners. And so if you're looking at an installment sale, and again, you're carrying back for a single buyer and you have multiple partners in a property, the challenge becomes you're still tied to your other partners. Or you might have to collectively foreclose on that particular buyer who doesn't pay you collectively all of you back. And so with the deferred sales trust, each individual owner can have their single trust for themselves and their family, and the funds can go into it and you're no longer tied to the other partners that you were with. You're no longer tied to the old buyer or the buyer that bought the property ultimately from the trust or the asset. And so we call this a seamless partnership separation, which is an excellent way to separate the partnership, whereas a traditional installment sale might bring you back into partnership. Now, the next one is 1031 exchange alternative or rescue. We have another whole video on that of the deferred sales trust versus the 1031 exchange, a whole series, in fact, on that. So I won't go into that one. Just know that the deferred sales trust can save a failed 1031 exchange. But back to the number 5 reason, the deferred sales trust is, I think, advantageous versus an installment sale. And I kind of mentioned it in the first few, but it's liquidity and diversification. So the ability to have the funds in stocks, bonds, mutual funds, lending funds that are liquid, you can access the capital quickly if you need it. Whereas if you did a traditional installment sale, the funds are typically not liquid, meaning the only way for that person to pay you would be to refinance the asset that they bought and or sell it or do something to pay you back, right? Whereas the deferred sales trust, we call it trade plus 3. You get the funds very quickly. It also means it can pay you, A, taxable on that, or B, you can put it into other real estate or other business ventures by partnering with the trust. In other words, we call it the go fund yourself, have the funds liquid and available to go fund your next venture versus having to rely on a bank or other partners. Because the funds can sit in the bank with the trust or sit at stocks, bonds, mutual funds, or cryptocurrency or different investments like that, which leads into diversification, which is so important right now. We think preservation of wealth is vital right now and diversification for that is to keep that preservation going. And so you can convert an illiquid asset like a business or commercial real estate or highly appreciated cryptocurrency into a diversified portfolio of liquid investments. This can help reduce the risk and volatility by preventing overexposure to a single asset class. And so the idea is, do you want all of your eggs in one basket, or do you want to diversify, right? In fact, I had a client, they exited out of 13.5 million of Ethereum and Bitcoin. They exited 7.5 million before the crash about 6 months ago, and they were able to diversify into some of the biggest companies in the world. And that helped them on a couple of fronts, not only defer the tax, but also diversify their equity out of what was a huge crash in the cryptocurrency market, and losing a lot of wealth there. Although we do see some recovery happening right now with Ethereum, pretty good. But also Celsius, that was a group where that if you haven't followed that, they were like an exchange group that were lending against crypto funds, and they went bankrupt. Okay, and so this client of mine had 30% of his total 13.5 million there, and before he used the deferred sales trust, and then he used it, so he got most of it out. And so it's just the protection against stuff like that, especially in the cryptocurrency world, but especially even to real estate world is changing, and we think opportunities to diversify right now are so important. So look at the deferred sales trust as a diversification and preservation of wealth strategy. Okay. Next one would be moving funds outside your taxable estate. So in a traditional installment sale, the funds are still inside of your taxable estate. Whereas we have what's called a DST plus or DST 2.0, which is a little bit different than an IRC 453, but it allows you to move funds outside your taxable estate. For those who are wondering what the 453 is, it's a tax code like IRC 401k or 1031 exchange, where IRC 1031, where you can defer tax using an installment sale method. We use another one that allows you to move outside your taxable estate, or again, it's a traditional installment sale. It'll still be inside your taxable estate, which means what? It means it's subject to 40% death tax. Okay, so for those that are above certain exclusion amounts, 24 married, 12 million single right now. So you want to look at what you're trying to solve as the problem, right? And what the deferred sales trust does for you. The last one would be new depreciation schedule. So in an installment sale, traditional installment sale, because you can't go back into real estate until you're paid back and pay the tax, whereas the trust, you can keep the trust going for as long as you want. That's, I guess, another point on this too, is instead of having, let's say, 3 to 5 year terms, which are traditional installment sales, you can have 10-year terms, and every 10 years you can renew for 10, and you don't have to worry about the buyer paying you back. Keep the deferral going. But as a part of that, you can partner with the trust and purchase real estate, of which you can get new depreciation schedule if you're an active investor. So that's a huge opportunity to get some cost segregation on top of that new schedule of real estate. And you only get up to 80% of it the way we structure it. But that's an important thing to understand that you have over a traditional installment sale. And so These are the same overview here, just kind of in different form. And you, by the way, you can email me info@capitalgainstaxsolutions.com for these slides as well. Okay, but what we're trying to build here, and we call this the pyramid of transformational wealth success, and it's taken from John Wooden, famous coach at UCLA. I played basketball in college growing up, so I love that sport. And he talked about, building a good foundation and a legacy for your wealth, or for your leadership and for your life. And we've kind of taken that, and we've talked about how do we do that for our wealth, right? And as a part of this, we have an entire kind of roadmap, if you will, or some building blocks to be able to do this. And it takes a team of trusted advisors. That's part of what we do here at Capital Gains Tax Solutions, is work with your trusted advisors and become the trustee for your deferred sales trust, and work with financial advisors and commercial real estate syndicators, operators. And we build this team of trusted advisors to help you build a solid foundation. And we take massive action. We're always trying to learn. We're always trying to be very focused and on what your goals are, and very loyal to what you're trying to succeed in. And then we add on that commercial real estate investing, of course, tax deferral, alternative or diversified investments. And then we try to take the characteristics of poise and dollar cost averaging and being smart about the way we approach investing. All of this kind of start to create the wealth creation, and they can lead into what's called tax optimization, where we can get new depreciation schedules. Again, we get the liquidity and diversification, cost segregation. But all of that is kind of hinged on optimal timing, right? Which is selling high and buying low as much as we can, at least having the opportunity to do that versus a 1031 exchange. Taking on smart debt versus dumb debt, right? We think right now is a good time to get out of debt and to be diversified and be liquid. And then when the market, goes south, when it's more of a buyer's market, that's a good time to take on smart debt and leverage up to buy deals at a discount. And that leads into wealth transformation, which is the ability to be 100% passive if you want to be for your time and your energy and your wealth. Have some debt freedom, maximize your time and your energy, minimize your stress, and preserve your wealth, which you've created, which leads into transformation, which can be estate planning, which is part of the largest wealth transfer in the history of the planet. It's happening right now. And if you have the ability to get funds outside your taxable estate, which the DST Plus provides, you can eliminate the 40% debt tax and be able to give more to charity or your heirs. And so that's kind of the legacy of the Deferred Sales Trust kind of wealth model. Okay, transformational exit plan. Here's a couple of deals we've done by the way recently. It's a $48 million deal in Las Vegas, a multifamily sale for a couple of GP partners. Here's another one, $33 million multifamily sale in Arizona. Here's another one, Texas, $8 million land sale south of Austin, Texas. Let's keep going here. We have a car wash sale out of San Diego. That was about a $12 million car wash for some developers. We also did a partial Delaware zero coupon deal for a client out of Denver, Colorado, $4.2 million deal. And they were facing some mortgage over basis challenges. And so we were able to solve that challenge and then move the rest of it into the Deferred Sales Trust. And we closed one in Tucson, Arizona. This is for a client of mine. He's just like, Brett, I've been 25 years managing the properties. I'm just ready to be retired, diversified, put it in the biggest companies in the world. And I'm going to feel fine about that. I just don't want to pay $1 million of tax. And so if I can defer it and keep and just live off the interest, I'm really happy about that. So he did that one. So we can cover so much more in this video, but this is kind of a short video, but this is kind of how it works. And you can look for some of the live webinars here, but essentially you have assets that are going to be sold to a third-party trust. And I act as the trustee. The trust gives you back a promissory note. And then the ultimate buyer actually buys the assets from the trust. Trust establishes a new basis. And typically it's, they bought inside it for the same price. So there's no gain there for the trust. Cash buyer takes the asset, and they can get a lender. It doesn't have to be all cash. They can get a loan. And they take the property, their asset, they're gone, and the rest of the funds are standing in the trust in a deferral state, including the taxes, typically, depending on the size of the deal. So we really want to help you escape feeling trapped by the 1031 exchange. We want to help you defer your tax, and we want to deliver at a high level. And that's We do that by education. We do that by speaking at conferences and equipping you with the deferred sales trust strategy. And so, so you can escape feeling trapped by capital gains tax. Again, what does this work for? Works for crypto, business sales, primary residences, public stock, private stock, investment, real estate, artwork, collectibles. And you can take control of your exit, and you can join the free Deferred Sales Trust Mastermind, which is every Friday at 10 a.m. Pacific Standard Time. And you can check out the new book, Building a Tax Deferred Exit Strategy, by going to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. I so appreciate you watching this video or wherever you're consuming the content of the podcast on iTunes. Please rate, review, subscribe. Please share this with someone who can be an inspiration to and someone who can help out today. We so appreciate everyone out there in the YouTube and the podcast world. And again, go to capitalgainstaxsolutions.com to learn more. And we will talk to you again.